hot, very hot.
Yeah, even Cape Town is also hot.
It's very hot this time. We're expecting some rain, but it doesn't today.
Yeah, now it's gonna come.
Yeah, it's going on. It's only guys about nobody late.
Huh?
It was on quarter to 10.
I can't hear you there. Right. So yesterday, I couldn't do a web. I was moved up somewhere, guys. But I did send some analysis on GBPJPY NZDCHF and AUDUSD. I did send some analysis of those three pairs. I don't know if any of you guys took note of that.
Yeah, I took note of.
Huh?
I think I took note of EUUSD.
AUD.
The one I trade. Yeah, the one I trade this morning, I was celebrating. I took profit.
And I also sent, I think, GBPJPY, British pound and Japanese yen.
Yes, that one I traded last night at 1.
Yeah. But of the three, only NZCHF didn't play out well. It went the other direction. So that trade, we're still waiting for an entry on that trade. Can you hear me, guys?
Yes, I hear you.
Right. So some might be asking, how did I come to the decision of going long on British pound against the yen? Can you see my screen, guys?
Yes, clear.
Right. From a higher time frame, from daily chart, we could see that price was playing in a demand area. It was in a very huge demand zone. You see this area here. So this whole area is a demand area, or we call it a pivot point, but I'll make sure I call it a demand area for now, because we haven't got to pivot points yet. So I was expecting price to bounce from this area. If we look from a higher time frame, this is a weekly chart, right? And you see how last week closed. Last week on GBPJPY, this was last week close. Undecisive. Market was undecisive, but where was it when the market was undecided of which direction to take? Where was the market? Market was hitting a demand zone. You see, each time market comes into this gray shaded area, it pushes up. You see? Even if you look from last week, it pushed up all the way up here, but it closed down here with an indecision candle. The market was undecided on what it wants to do. So prior to this week's open, prior to this bullish green candle here, the market had only this flying doji, whatever they call it, candle last night. This wasn't there. You see? But now, when I went into a smaller time frame, remember this is weekly. The moment we start going down now, H4. So we could see that market had already dropped. Market had already dropped this whole part. So market was here yesterday. Prior to this move, this whole part had already dropped. That was last week. So now, when you're doing your analysis, I think Ed is the one who asked about this, about where to put the fibs to see where market is going to retrace. We have already identified that British pound against the yen, it was in a demand zone. So after a impulsive move going up, we expect market to retrace a bit before it goes up again. But now, where do we put our fibs so that we can recognize where the market is gonna retrace to? Or where is it gonna start the uptrend again from the demand level? Remember, we are trading from the demand level, the gray shaded area. That's where we are trading from. We are going long from the gray shaded area. So now, prior to yesterday, if I drop down to a hourly chart, right? You see this green bullish candle on, I think it's Thursday, yeah. The green bullish candle on Thursday. Can you all see this candle here?
It's clear.
That big one. That's the candle where we had to put our fibs on. Or in other words, you can put your fibs, since we were trading a market which was still closed, you put your fibs from the lowest point of the previous week to the highest point of that week. Let me show you.
Okay.
Let me show you. Let me get rid of this. You see, this is our lowest point. Can you see where our lowest point of last week was? It was right into the demand area on our 5-month support level.
Yes.
Can you see here? That's where the lowest point of last week was. It was on our 5-month support level. And if you look to the left of the chart, you're going to see the same moves happening here. The same move happened here. You see? From that level. So now, we draw our fibs from the lowest of last week to the highest of last week. Also take note where the high of last week was. Take note where the highest point of last week was. Let me remove the fibs for now so that you can all see. Can you see where the highest, where the market rallied to here?
Yeah, the 4 months resistance.
Right.
Area.
Why would the market rally there? Does anyone know? Why would the market rally all the way up there, but then it failed to close above that level? Does anyone know why it did that?
Resistance price zone.
Yeah?
Resistance price zone for 4 months.
Brighton. Mr. Brighton.
Yes.
Can you tell me why, if you know, why did the market move rapidly on Thursday? Why did we have this on Thursday?
I'm trying to check. I'm trying to see my menu. Yeah, I can see.
Here. Why did we have that rally? Skumbuzo, do you have any idea?
Is it not because of the Brexit news?
No. We are not talking of fundamental here. We are talking of price. Let's look at the price. Let's not talk of fundamental. Let's look at the price. What was the price doing? Why did it rally there? Mr. Kudzi, can you tell us? I don't think. Okay. The reason why we had this rally from here. The reason we had that rally, if you look to the left of the chart, can you see this high? This high. You see those three highs?
Yeah.
They were all taken out by this bullish candle. They were all taken out. Now, why were they all taken out? Because there's liquidity here. There's people with stops here, with their stop loss. People who are short on GBPJPY because of this drop here. People who anticipated the market to keep dropping. So their stop losses here above these highs. You see?
Okay.
That was smart money creating liquidity to go long. If you watch the video that I posted on YouTube, there's exactly this description in that video. This is smart money. This move doesn't happen because of retail traders. That's smart money in the market. Those are big guys coming into the market. Can you notice the way it behaved after that move now? It ranged. Then it started coming back again. You see, enticing people again to go short. Then what do they do when the market open? They shoot up. You see?
Okay.
So it's things that you have to take note of when you're doing your analysis, because this is not a coincidence. Yeah, they used the Brexit news to make that move. You see, fundamentals always fulfill the technicals. It's always the case. Fundamentals will always come after the technical chart would already been there. You can already see the moment you master order flow, you already see what exactly the market is going to do in terms of technical. So fundamental is just there to fulfill technicals. You see, because what the institutions did here, it means they bought at a cheaper price down here. You see, and for them to buy, the institutions to buy at a cheaper price, they need liquidity. That's why they cleared all these highs here in one move. Why wouldn't they clear it here? Why wouldn't they clear it here? Because there was nothing for them to use the price to clear up these highs. You understand, right, guys? So now,
please, sorry, Ivan.
Yeah.
Could you please try maybe to explain that again? My question is, you just threw there to the left of the chart, saying that there was no liquidity there.
I can't hear you, Skumbuzo. I can't hear you clearly. Ouch.
I don't know if it's my microphone or what.
Who's on Galaxy? I think it's the guy. I think it's Kudzi. I've muted Kudzi. Yeah, you can speak.
Okay. Now that you've said that there is liquidity above those highs.
Yeah.
Meaning that there were stocks there.
Yes.
Okay. Now I get you.
Now,
but then I don't understand the part where you say before the high, you see that long candle. That one which took away the highs, the previous highs. Why did they have to take them on that certain time instead of the other times previously to be on the left of the chart? I don't know if you get me.
Oh, you mean why did they have to go that long quickly at what's the time here? That's like 1:30. Eh? Can you see 1 o'clock on the 22nd, right? So you're asking why that time?
Why that time?
Yeah, I'm sure if you go back to the calendar, let me see if we have. Let me see. Who is my? Let's go to the calendar and then I'll show you why. That was last week. Last week Thursday, 1 o'clock.
Yeah.
November 22. End date 22. Apply. There. Right. Right. Where's my chat? Where's my chat? Where's my chat? Right. So that's 1. That's 2. All right. GBPJPY. What's our time zone compared to Europe now? Is it +2 or +1?
+2.
+2, right?
Uh,
Right. There. If I'm not mistaken. You see this monetary policy here, that would have been the cause of all that mayhem in the market. If I'm correct with my timings, because this won't move the British pound and Japanese yen. Otherwise, it's Brexit news. But I'm sure it's something to do with the monetary policy for the euro. You understand, right? Do you get my point, Skumbozo? Yo, people are quiet here.
Chako shika bwana, kaza jinda rezo jinda.
Ndione phone with a noise, eh? Skumbozo?
Rezo.
I think he's gone now. I can't hear him.
Can you hear me? This is awesome.
Yeah, Mr. Wilson,
Okay.
I don't know if Skumbozo can hear me because I can't hear him. Because he was asking about why did they have to move the market like this. This is because of the Brexit and that monetary policy for the euro that did all this.
Yeah.
I'm sure he can hear me. I'm not sure because his mic is just quiet now, so I can't hear him.
No, I can't join us, Kumbus. I think I figured it out.
Sorry, guys, I was disconnected.
There we go.
Yeah, so I was saying, if you go back to the calendar, you're going to see that there was a monetary policy by the governor of the European Bank during this time here when the market went all the way up, come down, but it closed up. That was a stop hand. So they used that fundamental to move the market like this, to take out all the stops that were here. And remember, it's not just stop losses, huh? There's pending orders. There's pending buy orders there. You see?
Yeah.
For people who are anticipating to go long. So when they trigger those buy orders and then they start doing this, imagine your buy order has been triggered here and then market starts coming down like this. Already you're going to close that trade. You're not going to hold it. Because you'll be like, oh, market is now going the other way around. And probably when your buy order is here, your stops is probably below these highs. Yeah. You see, and they will take it out. So they trigger those buy orders, they come back, they trigger your stop losses of those buy orders. So it's like they're creating liquidity for this.
Okay.
You understand it now, eh?
I get you now.
Yeah. So now, yesterday when I was doing my analysis, I was like, okay, so since the market did this last week, because if you notice the whole of last week, it was just ranging. You see, remember this is an hourly time frame. Market was just ranging. This is a range. Even up to now, this thing is still ranging. You see, until it breaks this 5-month support or this 5-month resistance, until it breaks these levels, then we might look it's testing above here, or if it breaks below, then we are looking at market clearing up these lows here. You see, if it breaks here, then we are looking it to go here. If it breaks above, then we are looking for market to go all the way up here to 147. So now, the long position that I posted in the group, it was just a basic retracement trade. There was nothing fancy about it. And it's like, it was there for the market. The market was telling you, we're going to do this. You see, put your fibs from the support level to the next support level, where it's ranging from. You see, the market was ranging in this. Look, there. When market opened, OTE, optimum trade entry. If you notice, my fib levels, they're different to the default because I use ICT's Fibonacci levels. The 70% OTE level. I don't know who's got a green pen there, who's writing. I don't know who's that. So if you notice, the market retraced all the way to 79%. That was on Friday. But when it opened, let me clear up this. I don't know who was drawing here. Eventually, Friday, it closed right just above the 70.5 retracement level. That was the entry to go long. See, that's why I even emphasized that if you are on a C trader platform, who's writing now, guys?
Someone you put on mute, the Galaxy.
Who did I put on? Did I put him on mute? No, man.
No, but I thought me. I don't know who is it. I'm not the one who's writing.
Must be Brighton.
No, it's not me. It's not me, my guy.
Right. So you see, that's why I even emphasized that for those who've got a C trader platform, you could have put your buy orders prior to market open. Because on MT4, when market is closed, you have to wait for market to open. But by the time the market opened, you see, it opened up.
Ndara, can you hear me?
Yes, Wilson, I can hear you.
I mean, the noise.
Must be Brighton. Brighton, I'm gonna meet.
Okay, it's in divide.
Yeah, I think it's Brighton because I can even see his mic going up and down.
I people watching TV here. Yeah, but I just closed. Yeah.
Right.
Okay. Yeah.
So that's why I emphasized that prior to market open, you could have put your buy order on GBPJPY. You see? Then after that, yeah, we don't know what the market did.
Ivan.
Yes, Kudzi.
Yes, I have a question here. I'm on Fibonacci, brother. That's my big problem here. I'm always confused, like how you draw your Fibonacci there, or you are drawing your Fibonacci on the raging market, and I don't understand really how you drew it. Like,
can I try to explain to Kudze?
Right.
Yes, yeah. Yes, you can try.
The Fibonacci levels are based actually on the previous low and the previous high.
But remember, guys, it has to be an impulsive move. It can't just be a swing low or a swing high in a smaller market. Remember, they need to be for an impulsive move that that has to retrace.
Okay.
Yeah. Not just any swing low.
Exactly.
You see, like my fibs, the fibs on GBPJPY right now, they are focused on this move. That's the move we are looking for, the retracement. Remember, the retracement happened. There we go to 79%, 7% OTE. We enter the market to buy, to go long.
Oh, there was a big move. Yes.
Right. That impulsive move is the one that you base your fibs on. Not just any swing high or swing low.
Okay.
If you swing high or swing low in a dead market, then it's not gonna work. Because when market moves like this, it can't just keep going up. No, it has to retrace a bit before the continuation of this move. It can't just go up like a, I don't know what goes up, maybe like a rocket or something. Yeah, it has to retrace a bit, collect more liquidity, and then it goes high. You see the way it's doing now. You see this move, it went up, and then it ranged, come down. Probably there were stops down there. It was collecting more stops, and then it went high again. So now, what we're waiting for now, remember our first target is this high. If you enter a trade here, your first take profit is this high. You see? Your second take profit is this loss here. So now we are waiting to see what's going to happen when market gets to 146 level. If it breaks that level and closed strong bullish up on that level, then we know that British pound is going higher. But if it gets there and then it drops again, then we wait for the retracement to 79% or 70%. We take it long again because it's
buy again. Okay.
Yeah, because it's in that demand zone. Remember the demand zone. Remember this zone here. We are in demand zone. Wilson,
so
talk to me.
So the aggressive trader can't sell then. Eh?
Where it is now.
Yeah. Or you wait, then you put your stop loss for the last high.
If you are that aggressive and you are putting with a huge lot size, not aggressive when you are talking of 0.01, 0.05.
Okay.
You get my point?
Yeah.
If you are an aggressive trader, obviously you've got a huge lot size. You go short where it is, but your stops have to be tight. Maybe like
very tight, yeah.
2 pips
there.
above that high.
Yeah.
Then you take it down. Because as you can see right now, there's no more momentum on British pound and Japanese yen. Momentum is dying to the upside.
Yeah.
Can you see? You see this?
Yeah, it looks exhausted. It looks exhausted, yeah.
Yeah, momentum is dying compared to this. You see? So it can do the same move like this. Because I don't see Asian market moving it that much. Unless if there's some news for the Japanese yen that I don't know of. I don't see the Asian market moving this market that much tonight.
Yeah.
You see? But if you're an aggressive trader, let's say you've got 1, 2 lot sizes that you want to enter. Yeah, you enter the short, but your stops have to be tight. Then you target like 20 pips only.
Okay.
Yeah. You see? You target 20, 30 pips. So that's British pound and Japanese yen. Already the move had played out. Where's my phone now? Yeah, already up like, how many pips is that? That's a lot of pips. I'm up almost $300 on that trade since morning. Right, the session.
Since morning?
Yeah, since morning. The session is just gonna cut a bit, guys, and then I'll restart it again because remember we've got 45 minutes.
Okay.
So we've got like 4 minutes.
It's recording, yeah? Okay.
Yeah, it's recording. I'm recording. So, Brighton, any questions?
No questions yet.
Yeah, come on, my guy. You must have questions. What's wrong with you?
I'm busy thinking about the elephant that got into the pool. I just got that. I just got sense of it. You know what I'm talking about, eh?
What elephant?
My guy. I just remember the elephant. You don't remember that one?
I don't remember that one. What are you talking about?
No, I was watching ICT
Oh,
when you explained. Yeah,
yeah. Guys,
yeah.
and Wilson, what happened to your laptop?
Sure. It is not loading to desktop. Regular, it doesn't get crash on hard drive.
Sure.
Yeah.
Right. For those who have got no idea of the elephant, this is the elephant in the room. There's the elephant. This thing.
Yeah. So
That's
what
not-
I was thinking. So what I was thinking about shorting this pen, it's you can see that elephant where it stopped.
Yeah.
That's where we are right now. Yeah. So if the market won't close above those highs,
Yeah.
it might go down. Yeah.
Right. Remember the swing pattern failure, the swing high pattern failure, SPF.
Yeah.
What you need to do now, if you're gonna go short, wait for the market to take out this high, right?
Yeah.
But close below this higher close.
Okay.
If the market rallies like up, but then comes down and closes down here, then you go short.
Okay.
Yeah. But if it takes out this high and then it closes above, then I won't advise to go short.
No, yeah, it's a buy. It's a buy order.
Yeah.
Mm.
You see. So,
Unless the smart man are playing with us again.
yeah, it's like now there isn't much. There's no big players in this market here. British pound and Japanese yen. They've already done that. They've already taken most of their money here. Most of them are already taking profit here. You see, most of them they're taking profit there. You see. So now the next impulsive move that's going to happen here will determine where this thing is going to go long term. Whether it will be higher or below this 5 month, then we are going short. So the next impulsive move that's going to happen after these shenanigans that are happening now will determine the long-term trend for British pound and Japanese yen. But now, if you also go to a weekly, can you see where it is non-weekly? Can you see that?
Yeah.
So long term, it seems like the market really wants to go up.
Go up. Yeah.
Long term wise, the market wants to go up there. So, but tomorrow now we'll decide. Let's see what's going to happen tomorrow. You never know. It might retraces again, take out that high from last week and then comes down, then go all the way down
Okay.
to 5 month low. Then we are going short. We will be going short. So I'm just going to restart the session again and then we can talk about AUDUSD and NZDCHF.
Okay.
Yeah. I'm going to restart it just now.